Hello, welcome friends. In this video, we are discussing about fund accounting class 2. So, in first class, we have discussed some introduction and mutual fund, PE funds, and after that, hedge funds, and some LLP, general partner, and limited partner. We have discussed in class 1. And if you are not listening the class 1, you can check that class 1 in comments and description boxes. And after that we have started that master fund and feeder funds. What is this funds will be there? Master fund means what, and feeder funds means what? First of all, here the master fund means that is main fund. This is main fund in the fund structure, that whole fund structure. This is the main fund, and this master fund or main fund, they have some features will be existed. Just a second here. Okay, these mutual funds will have different features will be existed. So what we are discussing, master fund. So for this master fund we have different features will be there. What is these features will be existed for master fund or main fund? Here the decision makers or general partner will in the fund. So this master fund will have GP, that is general partner, who is the person taking the decisions of the fund. We have discussed who is GP, that is general partner, and most of the investments are reported in this fund. If the fund has 10 investment and more than 7 will be owned by this fund, so out of 10 bonds or 20 bonds will be there now, for most bonds will be reported, will be invested in the same cases. So if we have one head office, we have different branches. In that branches some different categories may have, but some branches must report to head office. That is the case, that head office, that centralizing system where is forming, that is master fund. Here most of the investments are reported in this fund, and most of the investors or commitment will be from this fund. So it is the main fund, so most of the commitments will from this fund, so most will report to this. And after that most will come from this fund to investors, or commitment will come from here itself from master fund. And here it is very common to these funds register in main country, so where they are registering main country, and from where general partner and most of the investors come from in the cases. So most of the investors may come from countries different. If they come, investors will come from different countries, then it will, that is also called as onshore fund, and we will call as onshore fund. And so most of the cases are generally this master fund and onshore funds both are the same. So here master fund means we have general partners and we have limited partners, and most of the partners will be there, and most of the branches will report this only, and most of the commitment or fund investors will come from here itself. And who is there in this mutual fund, if that persons will come from other country, then it will known as onshore fund. And whereas feeder fund is mainly registered to feed the money of few investors. So here we have discussed first master fund. After that we are discussing about feeder fund. This master fund is also known as onshore fund. So feeder fund means this is feed the money of few investors, mostly from foreign investors, into the mutual fund. So it will feed money from the investors. These investors may be American persons. This will feed money into mutual funds. So for example, if this mutual fund or onshore fund is registered in America or USA. It has registered in USA, and if they are international investors want to go, for example, Japan persons will be there. Japan persons or they may have tax in America, USA, and in the cases the fund can register separate company or partnership in that islands. So for example, if you see there one master fund is there, it is from USA. In USA there is tax burden will be there. If you go for I think Saudi Arabia, Arab countries will do not have taxes. I think so. They have only that penalties will be there morely. So what they will do now for this, they will kept one firm partnership firm in this entity here the Arabic countries and accept and register these investors in the fund and in partnership and company. These persons will give money to this feeder fund. This will feed that money to master fund, so it will collect money from here and it will give to master fund. This is feeding to mutual fund. This is known as feeder fund. So what we can do here, this feeder funds means feeder funds will normally collect money from the investors in that feeder fund. So here the feeder fund is there na, from here they will collect money and one master fund and feeder fund. These are in Arab countries which have no tax. They have registered and this will collect money and it will feed to mutual fund collecting money investors and in that feeder fund and send feed money to the master fund. In master fund the international investors names will not be reported as direct investors, rather than feeder name will be reported. So here it will not disclose the names of these investors, it will disclose name feeder name only. This branch name it will reported as investor, and these feeders are commonly registered outside the main country. These always try to go in a rural like a rural areas, rural countries, and this will not go into a main country. So these are also generally known as offshore funds. So we have discussed that another names of master fund will be onshore fund, and whereas feeder fund other name will be offshore funds. Why this onshore and offshore will become? Because these funds will be going to main cities, and these funds will go into main rural areas outside the main country. This is offshore fund, this is onshore fund will be called as. And where the main fund or general partner is located, that fund, all funds registered outside funds, all the funds registered outside the funds, this is offshore funds, and it may be KL. We have some black entity or blackers. This is the entities like companies or partnership etc registered within a fund structure, mainly used to block or reduce the tax liability at one investment level. Sometimes feeder also called as blacker. So here the feeders will be there now. mm, I think this feeder fund is there. Sometimes in feeders some areas have tax liabilities, some areas does not have tax liabilities. To or to reduce some areas tax liability, it will divide another block, another black entity, or we also known as blockers. And we what is the main use this blocker? To reduce the tax liability at one investment level. So sometimes this is also known as feeder, sometimes it also known as feeders, called as this feeders also called as blockers. Also black or reduce the tax liability. There is some funds will be there and they will invest in some areas, and if they directly invested from that country, na, they may need to pay the tax, and to avoid the tax they can register separate company cases. So if we see some master fund he is there and feeder fund he is there, and if master fund he is in USA, okay, this feeder funds is there, what they will do, this if for example it is he is there in India, it is there in India, and this feed money from here, and they have some persons in Marches, some persons will coming from Marches, and this is you invested and this is tax free. In India, they are rural areas. They focused in mutual fund is the main city. This is offshore fund. This is feeder fund. I will write neatly here. It will better. Master fund, feeder fund, and blockers. What they can do? Just a second. I will take better. So this is in USA. Okay. This is in India. This is also known as offshore fund. This is also known as onshore fund. Blocker means it is in tax free country will be there. It is take given money to this and this will feed to this. Okay, and here we need to pay the tax. We need to pay the tax. So what they can do, these companies, not the main company, so they will tell that this is not the main company, so they will tell that this is not a main company, it is not registered in India, so they did not pay the tax. They will tell in that cases, they will do the amount. And whereas here in India we have financial year. In India we have financial year. Same like as if you go for the fund accounting related, if you go to the fund accounting related, we have vintage year. What is this vintage year? This is the first year of the fund. So whenever the fund was started, that year is known as vintage year. And here the fund size, they will decide in vintage year, they will decide fund size. That fund size is known as commitment. They will decide the commitment in the fund or called as total commitment. Whatever the total commitment is there, now that total commitment is known as fund size, it will be calling. And whereas investors will have cash flows, will get the cash flows. Now we want to know which country will pronounce all the cases. So if we go for India, what we have in India, I think in India we have started with hundreds and thousands, and thousands after lakhs and crores. In India we have this currencies will be floated. And if you go for other country like USA, they don't call rupees, that is hundreds, thousands, lakhs, crores, they will don't call. So they will go with the thousands, that is thousands, and they have after that millions, and after that billions, after that trillions they will call. So they will thousands, millions, billions, and trillions they will call. So here India hundreds, thousands, lakhs, crores, whereas USA thousands. I think better I will write. So in India, I think K means it is thousand, na? India hundreds, after that thousand, after that lakhs, after that crores will be there. And if you go for other country like USA, they will start with thousand, after that they will call as millions, after that they will call as billions, and they will call as trillions will be there. Is this the case? So whatever the amount. So now you need to know the million, trillion also. It is better to for future. For few thousand means thousand only, thousand only, and millions means it is 10 lakhs. Millions means 10 lakhs, and brilliance means 100 crores, and where has trillion means 1 lakh crores. So thousand means thousand, million means 10 lakh, billion means 100 crores, and trillion means 1 lakh crores will be called. And here these amounts will be used because this must know, because we are dealing with MNCs and we have funds from different countries, and almost all fund houses will be in billions and trillions. You will not get thousands anywhere almost. Otherwise it may be startup. Even to startup also it may have minimum millions only, it will not go below millions in these cases. So how the private equity fund investors will cash flow? So in private equity, how the cash flows will be there? Cash flows will be there in mutual fund or hedge funds, or here investor will pay money to the fund house and at the time of launch itself. So this cash flows, what house it will start, investor with the person will pay to mutual funds or hedge funds, etc. So this is institutional. And if any mutual fund is launched, and launch period they will give some launch period, and all the interested person who have money, and they will give this money at the launch time, and approximately these funds rise huge amount, and it will take how to make each investment. And so fund might take approximately some time to invest all money into their investments approximately. So whatever the amount they will get na, they will invest in assets. These assets are shares, bonds, debentures, etc., etc. Or if any fund is raised more amount, they will invest in different companies. If they launched some cases and they complete the investment period, and to avoid keeping these investors money idle for years approximately, these funds do not collect money from investors at the beginning, and they when only taking commitment. So some may collect first and invest, and some may have some ideas, they will collect some amount and they will commitment, only the commitment from each investors, and they collect call money from the when they need it. So some persons will go whenever they need. So if we see in like real estate, they need some amount in one case and some amount in next period and some amount in next period. It is not allowed to build the building in a day. It will require much time. And if any person who is want to commit or ready to invest some amount in funds, he can commit and he will collected different amount in different period. Whenever they find the opportunity to invest, and the fund will distribute the money to investors, and whenever the fund has money, and fund has money receives cash in the form of dividends, interest, etc. So this will invested here na, from here it will get any dividend, interest. They will are selling any asset, they will distribute this amount to these investors whoever invested. Or many funds may distribute till the end of funds lifetime, and they will keep distribute the money. So this is the fund flow. And when the fund calls money, if a fund is in a related, they will call money. And if any investors failed money or defaulted, is known as, what if the person is not failed, is known as defaulted investors or delinquent investor, or defaulted investors in normal layman language. And that investor has to pay delinquent interest to the fund, like interest at the rate of 8%, 10%, it will be recorded in the LPA agreement. So if any person is committed and not paid at the time of call, you need to pay the compensation at the interest. Compensation is like as interest. If this partner continues to default and the general partner can take appropriate decisions. What can the general partner can take the appropriation? This decision transfer that stake to new partner. So if this person is removing and he will add another person who is good credit rating, credit score, and continue the fund with less commitment, and they will go here. What we are discussing, first we need to commitment. What is mean by commitment? So for that we will see what is mean by commitment. So commitment means this is the amount an investor in private equity fund agree to invest in a fund. So this person what amount is agreed to pay this mutual fund, that is commitment amount. So if any person is ready to pay some amount and maximum amount what he has collected, that amount will be known as commitment. The fund can collect this amount in any time of lifetime of that fund. They will collect in 20% in first year, 25% in next year, 30% in third year. Generally this commitment also include the management fee payable by the investor to the fund houses. So whatever the commitment is there na, in this commitment it is included that management fee payable by the investors. And if any person is there and given some amount and that fee rate is there 2% or 3%, it will be decided that management fee to the fund house for managing his money, and assuming that fund life will be there, and that fund amount commitment amount is included that management fee. For example, if fund person is there, Prabhas is there, Salar. So Prabhas, sorry here, he is my darling. I don't want to give any picture, I think better. So Prabhas, my darling, is there. He have more money. He committed some amount to pay such HB mutual fund, HB fund house, not mutual fund. It is fund house. He is give and he is ready to pay 100 crores, and this is commitment he has given. After the Salar movie is released and I will get the money, I will pay, he has told. So okay, and this 100 crores include my fees amount, that is 2%. 2% means I think 100 into 2% it will become 20 crores, means 80 crores is the fund amount and 20 crores is the my fees amount. Is however in some funds the management is outside the commitment, which means the investor has to pay fee over and above the commitment amount. So sometimes I will tell that Prabhas darling, you need to pay 100 plus 2%. That is when the fund is starting they will give that instructions, terms. And if the fund taken any loans, so I am their persons. So Prabhas is there and me, HB fund house is there. He is given commitment and 100 crores is the commitment. After the Salar movie releasing, he will pay. Up to that I need some money na. I have borrowed some money. I have taken some money, borrowed some money. Just a second here. I will take another one. So borrowed some money. Then this fund manager can decide whether first take investors contribution out of the commitment or to use this loan amount. So I will I can use this amount first or I can use this amount first. I will decide. And if the fund takes loan, then the fund manager can decide whether to first invest Airtel, and after that have to use the loan amount, part of the loan amount first, and then investors money out of commitment to make investment or to pay expenses in the fund like management fee. Here I will decide which amount I can use first. And for example, if you are invest of my person is committed 100 crores na, and I have also taken from outside 50 crores, it is better 50 crores, and I have taken loan. So now the fund manager me can take that amount from loan and invest or call from investors that whatever the amount will be there I will invest, and I whenever after the Salar movie is released I will call for Prabhas to give that amount I will invest in cases. Now I will call that capital call or contribution. When the fund need money to invest in assets or to pay expenses in the fund, they will issue capital call notice and ask money from all investors. So I will call this person. This call issuing capital call notice and ask money from all investors, and investors will approximately 15 to 20 days time they will pay the amount, and this is also called as drawdown. So I have called, just a second, it is better. So same example, Prabhas and HB fund, my fund name, commitment is 100. Now I need money, I have called to Prabhas. This call is known as capital call notice, and I will give 15 days or 20 days time. This 15 days time is known as drawdown, and since the fund is taking drawing of money from the commitment already made, and when the investor send or pay that money to fund, it is called contribution. So my Prabha darling will pay the amount na. This amount is known as contribution. And I will go distribution. When fund has means I have money and they send or pay that money to investor. So now I have invested and I got some money. Now I want to give this amount to Prabhas. This will be known as distribution. Distribution, whenever the amount are paid to investor, this will happen at any time in the lifetime of the fund, like first year to or 10th year, whenever the good amount of distribution will happen, towards later part will be the fund time. And when the funds are started selling its assets, our distribution can be grouped into followings. Now these distributions, so these distributions may be in three types. So this distribution may be in three types. One will be, just a second, one will be income based distribution, another will be capital distribution, another will be kind distribution. So I can distribute anyway. So if it is income distribution means if the fund receives interest or dividend, rent, etc., and distributed that money to investor, it is income distribution. Means I have invested somewhere na, from that place I have received a money and I will pay, it will become the income distribution. And when I will sell some assets and this investment distributed, this is known as capital distribution. Or if fund distributes any assets of the fund rather than cash, it is kind distribution will be known as. And any company they may issue, if the company wants for public issue shares or IPO, shares are listed in some stock exchange, this fund can distribute remaining shares to investors, so they can sell the market later when they need money. And I have distributed the money, sometimes I can recall the money. So I think so recallable distribution, I have distributed. Now I will recall the distribution. Recall the distribution means when the fund has money, by selling in investment they distribute the money, since they may not find any investment to invest, since the deal will be with illiquid assets generally. So reinvesting that money again is not possible. However, if the fund manager, that is that general partner is na, that general partner think they may get an opportunity to invest more in the near future, they can consider the distributed money as recallable distribution. Whatever this amount is there, no, it will be considered as recallable distributor, and it will, whenever he finds any opportunity, he will invest in that opportunity cases. So this means investor has to plan to reinvest or contribute to the fund when they ask or call that money in future, or whether this general partner can consider this distribution as recallable if that is mentioned in the LPA, that is partnership agreement will be there na. That partnership allows all distribution can be sent by the investor as per their wish. If it is mentioned as recallable distribution at the time of distribution, then investor has to plan, then reinvest later when the fund call for him. That is the cases. There will be under commitment. Under commitment means this is the remaining commitment for an investor. So for example, I will take another example, it is better. Mm, After Arjun, after the Prabhas, we will go with Chai. So I like Chaitanya also, Na Chaitanya. So Chai is there. This person committed, and the fund is absolutely our fund house only, HP fund. Now the commitment was same, 100 crores is the commitment will be there, and paid, he has paid some amount. He has paid 1 year 10 crores, 1 year 20 crores he had paid, and the unfunded commitment. So now 100 crores is the commitment and 30 has paid, means 70 will be there. That 70 will be known as unfunded commitment, that is UFC or UN, unfunded commitment. Unfunded commitment here, unfunded commitment is equal to commitment amount, this commitment amount minus contribution given is equal to unfunded unfunded commitment, it is known as. Here if there is any recallable distribution, they will increase the investors unfunded commitment. This is the case we have in cases, and we will discuss in next class next concepts.